This is India's #1 news network, and you're watching News9. English news as it should be.
A very good morning. You are watching News9. I'm Karthik Malhotra. Well, Modi-Vance has met Prime Minister Narendra Modi yesterday. Can India firm up the contours of the bilateral trade agreement until tariffs continue to stay on pause? That's the big story we are tracking for you today. And we will be joined by Mr. Gupta, the former India's ambassador to WTO, on the show. And also on the show, gold is nearing 1 lakh rupees grams. What should you as an investor do? Is this the time to buy more or sell? We'll bring you these stories and a lot more right here on News9. You're watching Morning Brief at 9. This is Morning Brief at 9. Let's begin with the headlines that we're tracking for you this Tuesday morning. Prime Minister Modi and US Vice President Modi-Vance meet in New Delhi. Both India and US claim significant progress on trade deal. Can India finalize the contours of a bilateral trade agreement with US before the tariff pause ends? That's what we will discuss on the show today. Meanwhile, India's Finance Minister Nirmala Sitharaman meets business leaders in San Francisco. Pitches for India investments. FM will now head to Washington today for meetings with the IMF, World Bank and G20 lined up. The government has imposed a 12% safeguard duty on 5 steel product categories for as many as 200 days after DGTR investigation on behalf of steel makers. Duty is set to protect domestic steel industry, but MSMEs cry foul. We'll tell you why. US stocks fall sharply as Trump threatens sacking Fed Chair Jerome Powell. Once again, Nasdaq slips as much as 2% in trade. And we've been telling you there's a gold rush. The yellow metal nears 1 lakh rupees per 10 grams in India. Is this the time for you to buy, hold your gold or sell what you have? We will get you expert views on Morning Brief at 9 today. India has added over 16 lakh new EPFO members in the month of February 2025. First jobbers aged between 18 to 25 years see a rise. As many as 2 lakh women made it to the formal workforce in the month of February. An update on the GENSOL Blue Smart saga. The Ministry of Corporate Affairs said it will take necessary action against GENSOL after examining market regulator SEBI's order. South Korean automaker Hyundai Motor India sees SUVs charge ahead with a new fascination for sunroofs. CRETA leads the race for Hyundai in India. And finally, mourners gathered to pay last respects to Pope Francis, who died of stroke and heart attack yesterday. Let's start with the top story we're tracking for you. India and the US are said to have made significant progress in negotiations for a mutually beneficial bilateral trade pact as Prime Minister Narendra Modi and US Vice President Modi-Vance held wide-ranging talks focusing on boosting cooperation in areas of defense, energy and strategic technologies. Now, the talks took place hours after Vance, accompanied by Indian origin Second Lady of the United States, Usha Chilkuri, and their 3 children, son Ivan, Vivek, and daughter Mirabel, landed in New Delhi on a largely personal 4-day visit to India that comes amid growing global tensions over the US trade tariff war. Now, the White House said Vance and Modi welcomed significant progress in the negotiations for the trade pact and formally announced the finalization of the terms of reference for the negotiations, laying down a roadmap for further discussions about economic priorities. Now, following the talks, Modi hosted Vance and his family over dinner at his 7 Lok Kalyan Marg residence that was also joined by several Union cabinet ministers and American officials. Now, the Prime Minister's office said Modi conveyed to Vance his warm greetings for President Donald Trump and said that he looked forward to his visit to India later this year. Now, in a social media post, meanwhile, Prime Minister Modi said the India-US Comprehensive Global Strategic Partnership will be a defining partnership of the 21st century for a better future of our people and the world. He also added that India and US are committed to mutually beneficial cooperation, including in trade, technology, defense, energy, as well as people-to-people exchanges. New Delhi and Washington are holding negotiations to seal a bilateral trade agreement, or a BTA as it is referred to, as agreed during Modi's talks with Trump in Washington, D.C. in the month of February. Now, the trade pact is expected to address a variety of issues, including tariffs and market access. India is looking at firming up the first tranche of the trade pact before Trump's pause on the customized reciprocal tariffs lapse. In a post on X, Vance said he looks forward to working under US President Trump's leadership to strengthen friendship and cooperation with India. Now, this is the latest development that we are bringing to you this morning. Jayant Dasgupta, former Indian ambassador to WTO, us this morning. Mr. Dasgupta, good morning. Well, it seems like great optics with not just the US Vice President, but the entire second family visiting India. Impeccable timing as tariffs stay paused. What's your read really on India and the US finalizing the contours of the first tranche of the BTA and that being on track for fall of this year?
I think the progressing very well. And of course, the 90-day deadline ends around the 8th of July. So the Indian negotiators now are going to Washington tomorrow. And I think this will be a very significant meeting because the terms of reference have already been finalized.
Right. And
now the discussions have been structured into 19 chapters. So 4 of those chapters are extremely important. One is, of course, tariffs, which is the foremost. The second one is non-tariff barriers. And the US has been mentioning this time and time again, that these add to the costs of the exporters and have a tariff equivalent in a sense. For instance, if you have to, get all kinds of certificates and they cost money, they cost time, that adds up. The third one is about customs facilitation, because even after you have conformed to everything that is required, then you have to wait for customs clearances and maybe in a few cases some queries, etc., which you have to answer, and it takes time. And the last one is extremely important from the point of view of global trade for the US. It is about rules of origin.
Right.
Because if the US is going to have a differential tariff structure for all countries in the world, then there would be different rules of origin for each product, each country. And
Absolutely.
It is a minefield. It is mind-boggling whether the US would actually venture in that direction. So, but rules of origin, because a lot of products, for instance, Apple phones, if I may take the name, a lot of components come from China.
Right.
It has been estimated that over 80% of the components, the value, comes from China. Now, whether the US will say, all right, Apple phones, yes, so much tariff, but the component can't be valued at more than such, percentage. So that is the kind of thing which will have to be worked out, but that is unlikely to be worked out within 90 days.
Absolutely. Well, I understand that. And of course, it is important that at least the terms of reference have been now agreed upon. But I think from a new announcements on tariffs perspective, there are certain critical sectors on which we are yet to receive any news, positive or negative, and the likelihood of that news being negative is higher in our opinion. But I'm talking about 2 particular sectors from India's perspective. One is pharmaceuticals and the other are semiconductor chips. Now, one sector where India has a competitive advantage and another one where India wants to build one. So do you think that storm has been diverted, Mr. Dasgupta, or is it just delayed? It is going to hit us in some time.
I think in the case of pharmaceuticals, the US will have to take a very deep look at its own pharmaceutical industry. I would like to place a few facts in that context. One, nothing can sell, no pharmaceutical can sell in the US unless it has been approved by the Food and Drugs Administration of the US. Now, for every manufacturing facility, the FDA gives clearance. And the FDA approved facilities in India outnumber those in the US. So India is the prime supplier of medicines to the US.
That's right.
45% of the generics sold in the US, 4 out of 10 prescription drugs in the US are of Indian origin.
Right.
15% biosimilars are of Indian origin.
Absolutely.
So, if they raise the US raises the tariffs, it is going to hurt the American public the most.
Absolutely.
And the other question is, can the US substitute for these facilities and import it from some other source quickly? The answer is no.
Yes. Stay with us, Mr. Dasgupta, because we are also getting live visuals as Prime Minister Narendra Modi has in plane for Saudi Arabia, and PM Modi will be there on a 2-day visit today and tomorrow at the invitation of Prince Mohammed bin Salman, Crown Prince and Prime Minister of the Kingdom of Saudi Arabia. Now, of course, just for our viewers, Modi will meet Prince Salman during his visit to further deepen and strengthen ties between the two nations, and that is the Ministry of External that said this in a statement last week. Now, this high-profile visit underscores the remarkable transformation of India-Saudi relations from modest beginnings to a comprehensive strategic partnership spanning economic defense and cultural dimensions as well. Now, remember, Prime Minister Modi's visit comes amid intensified diplomatic engagement between the two nations. Just last year, India made 11 ministers to Saudi Arabia. Modi's visit to Saudi Arabia is crucial for the geopolitical order. The world in general and West Asia in particular is suffering from conflicts made worse by economic tensions. Mr. Dasgupta continues to be with us, sir. We are talking about J.D. Vance's visit, but also another significant visit this morning. Prime Minister Modi now in planing and heading to the UAE. So we were talking about pharmaceutical sectors specifically in the context of US, but India's own energy requirements, and that is where Saudi plays a critical role. And now US saying that it is going to drill baby drill and wants India to buy more energy from the US. How do you think India should be balancing its energy requirements between these two nations?
Actually, it is not a question of the Saudis alone. It is also a question of Russia. And the Americans have given an indication that they want India to, shut off all oil purchases from Russia. That was about 2 months ago. Things have changed since then. But I think the Americans are quite intent on selling oil and gas to India and to reduce the trade deficit. I think the informal reports are that India has drawn up a plan by which the trade deficit of about $40 billion or so will be reduced to about $20 billion by India's purchases of oil and gas from the US. And coal briquettes, etc. Now, the point is that these have to be bought at international prices. And if the Americans can compete, so be it. We are agnostic to the source from which we buy. But the Russians had sold oil to us at a concessional rate, discounted rate, which helped us in the post-COVID, aftermath, in which economic activities had shrunk.
You're right.
So that helped us.
So India is doing India first when America wants to do America first. So technically, the market dynamics should play, and whichever country gives us the cheapest oil, we should go ahead and buy. But Mr. Dasgupta, I believe India's real requirement from the US on the energy front are the nuclear reactors and that technology transfer, which has been pending for decades now. There has been some talk on the small reactors being exported to India. But how long before India gets the entire technology, for which, of course, it would help US as well, and it will sort of balance out the US trade deficit with India and India's surplus if India buys more nuclear reactors from the US?
That's a very important point because the small nuclear reactors will enable us also to achieve our target of, zero carbon emissions by 2070. And we are really looking forward to it. And it is not a question of just buying it, but also about co-production, about transfer of technology, which is extremely important. Because we don't want to be dependent on any country forever.
Right.
or for the foreseeable future. We want to do it on our own, and we have the technology. We are doing large
Visuals of
reactors on
US
our own with a little bit of help from foreign collaborators. So I think small nuclear reactors is a very interesting area. It will help us in achieving our targets of zero carbon emission and in providing clean energy and reducing the load of environmental pollution, which the coal-fired power plants in India are contributing to in a large measure.
Well, we will leave it at that. Mr. Chandas Gupta, former India ambassador to the WTO. Thank you so much for joining us on News9 this Tuesday morning.
Pleasure.
Well, moving on now, Finance Minister Nirmala Sitharaman has met several business leaders in San Francisco yesterday and discussed bilateral areas of cooperation in sectors such as technology, AI, energy and digital infrastructure, as well as opportunities to enhance investment collaboration between India and the US. Now, Finance Minister Sitharaman arrived in San Francisco on Sunday as she began her 11-day trip to the US and Peru with an interaction with the Indian diaspora in the Californian city. Now, the minister met Silicon Valley venture capital firm A16Z general partner Mr. Minda and also technology company VMware Chief Executive Officer Raghu Raghuram in San Francisco. She discussed transformation in tech space and suggested that 16Z and VMware may like to explore collaborations across sectors within the domain of AI, including in sectors like education, healthcare, as well as building centers of excellence. Now, Finance Minister also met Google Cloud CEO Thomas Kurian's team and discussed the evolution of India's digital infra under the Digital India initiative in recent years. A post by Finance Ministry on X said that Kurian acknowledged and appreciated India's AI mission. Now, later in the day, the minister delivered a keynote address on laying the foundations for a developed India, Viksit Bharat, by 2047 at the Hoover Institution at. She also participated in a fireside chat with Professor Steve Davis during the event. Now, from San Francisco, she will travel to Washington, D.C. today, which is April the 22nd, and will stay in D.C. until April 25th, where she will participate in the spring meetings of the IMF and the World Bank, plus the G20 finance ministers and central bank governor or FMCBG meetings. In addition to that, Development Committee plenary, IMFC plenary and Global Sovereign Debt Roundtable meetings are also scheduled for the Prime Minister. And finally, India on Monday imposed a 12% provisional safeguard duty for as many as 200 days on 5 steel product categories to protect domestic players from a surge in imports. The decision follows a recommendation for the same by the Commerce Ministry's investigation arm, the Director General Trade Remedies. The government has set the import price between $675 to $964 per ton for the 5 steel product categories. Any shipment imported below these imported prices will attract the safeguard duty. Now, the safeguard duty shall not be imposed on the product categories when imported into India at or above the specified import price of cost plus insurance plus freight basis, according to the ministry's notification. Now, the product categories are hot rolled coils, sheets and plates, hot rolled plate, mill plates, cold rolled coils and sheets, metallic coated steel coils and sheets, and color coated coils and sheets, whether or not profited. Now, last year in December, the DGTR started investigation into the sudden surge in imports of non-alloy and alloy steel flat products, following a complaint from Indian Steel Association on behalf of members including ArcelorMittal, Nippon Steel, India, JSW Steel, Steel Authority of India and others. According to the industry, the existence of significant excess capacity far exceeding domestic consumption in China, Japan and South Korea have arisen due to slowing demand in those countries. Import of steel products has increased from 2.3 million tons during 2021 to 6.6 million tons now. The imports have increased from countries including China, Japan, Korea as well as Vietnam. The DGTR had noted that the objective of the duty is to protect the Indian domestic industry against the surge of imports. While some big steel domestic steel makers are advocating for imposition of the duty. The user industry is strongly against it, as the duty would push raw material prices, impacting their competitiveness. MSME exporters from the engineering sector have stated that any move to impose additional duties on steel imports would make domestic products uncompetitive and impact the country's outbound shipments from the sector. Well, time for a short break right here on Morning Brief at 9. But coming up on the other side, a mood check on the Indian stock markets, as well as gold nearing the 1 lakh rupees per 10 grams. What it means for you as an investor or a buyer of gold jewelry. We'll bring you all that and more on the other side. You're watching Morning Brief at 9.
What a save! What a save!
I need expert savings. I need my carrier.
NEWS9 Corporate Badminton Championships, in collaboration with Pullela Gopichand Badminton Foundation, is here for all of you to experience the passion and network. This is a great opportunity to experience your childhood memories and also be part of a corporate event which enhances sportsman spirit in all of us. Wishing you all the best and hope to see you here.
Presenting sponsor, Srinidhi University. Kindle the light within. Venue partner, Pullela Gopichand Badminton Academy, Hyderabad.
In a huge setback for bike taxi services in Karnataka, Tamil Nadu races ahead with 9.69% growth rate, India's fastest growing state this year. Good for Tamil Nadu. You may not be directly involved with what your son or daughter does, but your influence does. My name is Sudha Sadanand. Welcome to the South Indian.
You're watching Morning Brief at 9. Let's bring you a mood of the markets. The Indian stock markets opened just about 5 minutes ago, and let's see what the mood. A slightly somber mood, not the green shoots that we were seeing yesterday. In fact, a little bit of a dip in markets. Nifty 50 just about holding on, clutching on to that 24,000 levels, up at just about 24,079 points, down about 0.2%. in early trade this morning. Sensex, meanwhile, still about 700 points away from that magic 80,000 level, which we had, of course, seen the Sensex reach more than a year ago. And remember, the Sensex had reached a lifetime high of almost 86,000 points on the 27th of September. Still some distance away from that, opening a little weak this morning. Of course, this weakness in the Indian markets is not supposed to be fundamental, but rather it comes as something that happened in the US yesterday, and these were threats by US President Donald Trump on sacking Fed Chair Jerome Powell, which sent the entire US stock markets and all the US indices spiraling down. We are seeing a little bit of a ripple effect of that in the Indian markets this morning. Meanwhile, good news coming on the fear index. India VIX is down about 2%, holding on to about 15 odd levels. Let's look at the Nifty 50 heat map and try and make sense of which are the sectors which are in action today. Well, as expected, Nasdaq was down 2% yesterday, and you're seeing an impact of that on India's IT sector. Infosys is down almost 2%, 1.9% or so on the clock right now. HCL Tech down almost 1 percentage point. Similar sentiment, not as deep, coming in from TCS and Wipro, which are both down about 0.5% each or so. Well, the energy stocks are a little bit mixed today. Coal India is up about 0.5%. Reliance and ONGC reeling under a little bit of pressure. Meanwhile, let's look at the utilities. NTPC and Power India, these are down. There's some sort of a pressure that we are seeing in these stocks in trade early morning today. Well, we have with us Mr. Amrish Baliga, independent market expert, joining us this morning. Mr. Baliga, good morning. US President Donald Trump seems all too keen to sack Fed Reserve Chair Jerome Powell. He's threatening to get rid of Jerome Powell sooner than expected. Now, this obviously has impacted the US markets. In the long run, do you think Powell getting sacked is going to have an impact on Indian markets?
No, I mean, any impact on the global markets will surely have an impact on the Indian markets, at least in the short to medium term.
Right.
But then if you're talking of longer term, I think it's going to be more of the way our economy performs and sentiments domestically than what's happening globally.
Right.
As far as India is concerned, I think this whole issue of trade tariffs, I believe should be beneficial for India in the longer run. Again, assuming that we have the trade agreement in place sooner than later. So overall, and along with that, we are also looking at consumption improving because there's more cash in hand as far as the Indian consumers are concerned. We are expecting a normal to better than average monsoons. That also should be positive on consumption. So overall, I mean, we are expecting the Indian economy to perform decently well. So comparatively, as far as global economy is concerned, we should be an outperformer. And normally, outperforming economy and markets normally receive more funds than the rest of the markets. So overall, long term, I think we should be decently be positive on India. Short to medium term, it will get affected by whatever is happening globally.
I want to specifically talk to you about, I mean, of course, it is understandable, and I agree with you that the India story and the fundamentals of the India story will define which way India goes. But on the IT story side, there seems to be a little bit of a confusion right now emanating, of course, from the commentary which is coming in from domestic IT sector leaders as well as the recession commentary on the US. Now, we are seeing very, very volatile days on the IT sector. When the US markets are doing well, the IT sector charges ahead. And on a day like today, we are seeing a little bit of red on the IT space. In the let's say 1 year to 3 year horizon, how do you expect investors to deal with their IT holdings?
No, I mean, the way I see is IT could be a dark horse. If we're talking of the next 1 to 3 years, it could be a dark horse. Yes, I mean, surely there would be an effect on the order flows. But we should remember that as far as IT space is concerned, there are two types of order flows. One is discretionary, the other one is non-discretionary. I mean, the discretionary order flows can get affected, no doubt, if there is a recession in the US. But at the same time, the order flows will not become zero. I mean, it will reduce to a certain extent. I think that is already there in the prices of most of the IT stocks, especially, in the last month and a half. And again, post the management commentary of the biggies which came, I mean, that's, I think, already there in the price. And when we talk of the non-discretionary order flows, I think that will continue because you need to keep the systems running. So overall, I don't see a huge negative for IT from here on. And I think this is a buying opportunity, especially if you're talking of the next couple of opportunity, if you're talking of the next 1 to 3 years holding.
All right. So a buying opportunity, buy on dips. Is that what you suggest? Is a day like today a good day to go ahead and buy and build that kitty of IT stocks?
Absolutely, because typically in the sectors where you are looking to invest, I think the down days like these in the specific sector, I think it's a good day to buy because you never know where the bottom is.
All right. Well, of course, you never know where the bottom is. There's also news coming in, Mr. Baliga, and this is from the steel sector. And there is a protection which the government is giving, a 12% safeguard duty for 200 days. Now, will the impact continue beyond the 200 days? And is this something which is going to impact India's steel sector, India's auto stocks, among others?
Yes, I mean, even going ahead, I think because of the sort of tariff policies, I think more number of countries globally would be looking inwards and how to safeguard the domestic industry. And that's exactly what India is looking at because clearly it's not only in steel, but I suppose across various commodities and sectors, you could see some amount of dumping coming in from China. Because at the end of the day, they have huge capacities. And US was a decently large market, about 15% of the exports. So I think because of which there could be dumping happening in other countries. So I think each of the countries will have to look at safeguarding their domestic industry. So yes, I think it is positive for the steel industry overall. Again, looking at the sort of infra demand, the auto demand which is there domestically, overall it is positive for steel. But as far as the auto space is concerned, yes, I mean, they could have got, the steel imports much cheaper than what it would be going ahead. But these are generally pass-throughs. So I don't see a negative for the auto.
Understood. Not a negative, really. Well, markets have recovered slightly. They opened a little low. They're just about flat right now. Sensex and Nifty are up just about 0.1% or so. Now, while on the Nifty 50, we still seem to be some distance away from the September highs, Mr. Baliga. Remember, the index had reached the all-time high on the 27th of September. Right now, at about 24,120 odd levels, we seem to be in the end November, early December levels. Now, is it too soon right now to believe, Mr. Baliga, that this upward swing is going to continue, and is it too soon to establish a trend line just as yet?
I think so. Because, we may be out of the woods, but it doesn't mean that this is a fresh bull run. A beginning of a fresh bull run. I don't think so. I suppose the whole of 2025, the calendar year, could be a difficult year for the markets from earning huge profits like what we saw from 2021 to last year. The way I see it is possibly we could be at an intermediate top right now, because this move was straight from 22,000 levels. We have seen a decent move. So there could be a correction because whatever said and done, I think global news is going to, attack the markets quite closely. So I suppose at least in the short to medium term, I don't see much of an upside.
Okay.
It's possible that we could see a correction, which again could take us closer to about 23,000 levels, maybe a bit lower.
Right.
That again, I'd say would be a good buying opportunity. And at the current levels, in fact, I'm suggesting those who had bought at lower levels in the last 2 to 3 weeks to at least book some profits.
All right. Well, those who did go and buy those dips, it might be a good opportunity to make some profits. Thank you so much, Mr. Baliga, for taking out and being here with us on News9 this morning. And with that, we will slip into another short break. But coming up on the other side, gold hovers around the 1 lakh rupee mark. Will it reach that figure today? And what should you as an investor do with gold? Is this the time to buy? Should you hold on to what you have or make some profit by selling at these extremely high values? We will bring you insights into that with an expert, Kunal Shah, joining us on the other side. You're watching Morning Brief at 9.
आइडिया कूल। ये एयर कंडीशनर नहीं, एआई कंडीशनर है।
NEWS9 Corporate Badminton Championships in collaboration with Pulela Gopichand Badminton Foundation is here for all of you to experience the passion and network. This is a great opportunity to experience your childhood memories and also be part of a corporate event which enhances sportsman spirit in all of us. Wishing you all the best and hope to see you here.
Presenting sponsor, Srinidhi University, Kindle the Light Within. Venue partner, Pulela Gopichand Badminton Academy, Hyderabad.
Welcome back. You're watching Morning Brief at 9 right here on News9. The gold prices have inched closer to the psychological mark of 1 lakh rupees per 10 grams as the bullion rate surged 1,650 rupees in the national capital yesterday, Monday, on a weak dollar and uncertainties over US-China trade war driving demand. Well, the yellow metal of 99.9% purity reached as high as 99,800 rupees per 10 grams on Monday. Gold, meanwhile, of 99.5% purity bounced 1,600 rupees to hit a fresh all-time peak of 99,300 per 10 grams in local markets. So far, this year alone, on yesterday's close, gold prices have risen 20,850 rupees, which is as much as 26.4% per 10 grams of gold. I'm talking about data from the 31st of December to yesterday, 21st of April. Just 4 months and a 26% return is what gold has given you. Now, globally too, gold futures breached the psychological $3,400 per ounce mark for the first time, rising over 80 per ounce, or 2.4% or so over the year. Now, what exactly is going on here? Well, obviously, there is no doubt about the fact that this is some sort of a gold rush that we are seeing. Now, let's just recap some of the numbers that we told you and try and bring those for you on the screen as well. Gold has breached $3,400 per ounce in the US. Gold prices in India are now nearing the 1 lakh rupee per 10 grams mark. Now, what is all this telling us? It's telling us that in volatile times and when markets are volatile, investors switch to gold and use gold as a hedge. This is the first thing that it tells us. The next thing that we get to know is that this demand, this sudden demand that we are seeing in gold is emanating not from the jewelry that people like you and me are perhaps going and buying, but largely the big institutional investors as well as central banks, which are now building gold reserves instead of the US dollar. Why? Because the US dollar index has been falling, and this fall in the US dollar index is coming on account of the rising US bond yields, which is basically US tariffs, which are putting the US economy in a bit of a downturn, not the investors not really being very bullish on the US dollar. Then in addition to that, it's important to remember that gold prices are calculated in USD terms. So $3,500 or $3,400 per ounce, that's the international rate of gold, which is paired with the US dollar. So when the US dollar becomes weak, gold becomes cheaper for the rest of the world. So some of the questions that we want to ask today and help you clear your mind is, what next for gold prices? Is this pretty much the ceiling which has been hit, or is there a new frontier that gold is going to breach? Or potentially, could there be a reversal in these gains and gold could dip? So you as an investor, should you buy, should you hold, or should you sell gold? And while you make up that decision, what is the best way to really be invested in gold? Should it be gold ETFs? Should it be physical gold or any other form of paper gold? And finally, is there any chance that sovereign gold bonds could make a comeback? Well, these are some of the questions that we will discuss and try and get answers from. Kunal Shah joins us. He's Head Commodities Research at Nirmal Bang. Good morning, Kunal. Thank you so much for being here with us. Gold at 1 lakh rupee levels. Did you see this coming, let's say, around this time last year?
Well, honestly, I had not anticipated it. I was expecting it to test around 1,000 kind of levels. Yeah. But it is soared quite a bit above my expectation. We have been a bull in gold from last many years, and right now the parabolic surge in gold prices is a reflection of the trade war or the actual geopolitical tension built up between US and China in a form of trade war. Because if you see, US is quite adamant right from the start. US has exempted all the countries till the month of July from the reciprocal tariff except China. Right. And China has retaliated very aggressively to the same. So now we are talking about two economies which contributes 45% of the global GDP. Right. US and China accounts for the $50 trillion of GDP together. Right. And global GDP is roughly at the start of 2025 was around $110 trillion. Right. So these two countries, $50 trillion economies, are fighting with. Can you imagine what kind of uncertainty that will stoke in the mind of investors, hedge funds, money managers across the world, sovereign entities across the world? What's going to happen? Nobody knows. Absolutely. Whether this is going to escalate further or whether there is going to be a de-escalation.
In fact, this is exactly what my next question to you was going to be, Kunal, that what happens from here, from this 1 lakh level or from the $3,400 per ounce level? Which way is gold going to move? Is it going to move further up? Is there going to be some sort of a plateauing, or conversely, could we see some sort of a decline in gold prices?
Okay, first of all, nobody knows what's going to happen from here.
Are tariffs and tariff announcements going to be the singular deciding factor in assessing the direction of gold? Or it could be any other commentary, like we've seen on US President Donald Trump threatening to sack Jerome Powell, and that is pushing markets down and helps the inverse relationship and gold goes high.
Yeah. So first till 3,200, 3,300, it was a tariff thing. Okay. Now Trump is adamantly after Mr. Powell that he should resign, calling him loser on air, and indicating that they should do the rate cut immediately.
Right.
So market is pricing in what if Federal Reserve cut the rate immediately. So gold has discounted the tariff war rate. Gold has discounted the interest rate cut also. In last 2 days, gold has moved up by almost $200. So gold has almost discounted the rate cut. So now when the rate cut comes, what is going to happen? We are going to see some profit taking at that point of time.
Okay.
But I am not recommending to buy gold at these levels.
Okay.
I believe that these are the levels to book profit. I have been quite adamant on these statements from last many weeks. And I believe that sanity should prevail at some point. The way gold is moving, there is no asset class in the world. It is indicating that we are heading for a sharp slowdown or a recessionary scenario. So I think the sanity should prevail over coming months. You may see some positive announcement on when it comes to deal on the trade deal front or so. So something of that will come off to lead to some profit taking. But whenever the profit taking comes, gold will continue to remain bullish in a bullish trajectory because of uncharted territory where we are right now. Nobody knows which currency will take over from the dollar. If it does, if that kind of scenario, what if the dollar crashes? What if there is an abrupt rise in the US 10-year bond yields? What if there is a recession? What if? So all these scenarios are not priced in. So that's why the moment you see a correction of 5 to 8%, you should again re-enter. But right now, this is not the time when you build fresh longs.
All right. So you're saying enter with a correction of 5 to 10%. Is that the potential downside that you're estimating for investors who don't take your advice right now and don't sell and continue to hold on to the gold that they have? I understand you should perhaps not invest afresh at these levels, but should the downside be limited to an understanding of just about 5 to 10%? Or do you think the downside can be even deeper than that?
I think downside maximum 5 to 8 to 10%, not more than that. The kind of run up we've seen, more than 55-60% rise in gold prices. This is not good. So I think whenever the fall comes, at least 8 to 10% correction is something what we are envisaging. I'm not saying that it will come immediately. It may take some time. I don't know what's going to happen with the US trade front or the Jerome Powell front. What I don't know what is going to happen. But my advice to the investors or the traders, these wait for some time, wait for some correction rather than just chasing the mad bull run.
All right. And I think a fairly lame question, but just for the clarity of all those who are watching us right now, for those who do enter the market now, later, 5%, 8%, 10% correction at whatever point, is there any merit in holding on to physical gold, or should it just be paper gold or gold ETFs?
I think gold ETFs are a good instrument to invest in. Either you should go for gold ETF or gold fund. Those are good instruments to invest in gold.
All right. And finally, can we very safely conclude that sovereign gold bonds have lived their life and there is no way in hell that we will see SGBs coming back?
The way gold prices have rallied, it looks quite difficult. I mean, government will think many times before, coming up with another gold bond tranche. It's not going to happen.
All right. Kunal Shah there joining us this morning. Kunal Shah, thank you so much for taking time out being here with us on News9. Well, before we slip into a short break, let's look at the global headlines in news this morning. Catholics worldwide mourn Pope Francis's death. Pope Francis, the leader of 1.4 billion Catholics, died a day after Easter yesterday at the age of 88. Asian equities and US stock futures decline amid anxiety over tariffs and President Trump's criticism of the Fed Reserve, boosting gold prices to a record high. The US dollar index slid to as low as 97.92 in early trading on Monday, its lowest level since March 2022. The benchmark dollar index declined by about 5% since early April. And bloodbath on Wall Street as Dow closed 2.5% down, Nasdaq also down 2.5%, S&P 500 down about 2.3%, all after President Donald Trump ramped up his criticism of Fed Reserve Chair Jerome Powell. China's Huawei Technologies to begin mass shipments of its advanced 910C AI chip to Chinese customers in a relief for Chinese AI companies left behind after NVIDIA's H20 chips were barred from entering China. A Delta Airlines plane carrying nearly 300 passengers suffered an engine fire after pushing back from the gate at Orlando International Airport in Florida, forcing passengers to evacuate using slides. Pentagon Chief Hexet shared sensitive Yemen war plans in second signal chat. Revelations of a second signal chat raise more questions about his use of an unclassified messaging system to share sensitive security details. Israel Prime Minister Benjamin Netanyahu arrived at Tel Aviv District Court on Monday, the 21st of April, to testify in the long-running corruption trial. China's growing surplus has pushed its alumina exports to their all-time second highest level in the month of March. The overseas sales of the raw material for smelting aluminium have crossed 300,000 tons. All these and more on the other side. You're watching Morning Brief at 9.
Smash your way to glory at the NEWS9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. NEWS9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, LAKH Badminton Academy, Hyderabad. Dates, May 9th to May 11th. A chance to showcase your talent and make a mark. The court is set. Are you ready? Register now.
Presenting sponsor, Srinidhi University. Kindle the light within. Venue partner, LAKH Badminton Academy, Hyderabad.
Bharat welcomes the world to a new era of creativity. Waves, World Audio Visual and Entertainment Summit. Connecting creators through Creatosphere. Wave Accelerator. Waves Bazaar,
where stories, ideas and content go global.
Connecting countries through global media dialogue and Bharat Pavilion.
Shaping narratives and partnerships. Culture, cinema, gaming. Waves fuels the next wave of entertainment.
Connecting creators, connecting countries. Waves 2025.
Welcome back. Let's look at the global stories we're tracking for you this morning. Anxiety over Trump's tariffs just doesn't seem to die down. The week opened with a slide in Asian equities as well as US stock futures. The dollar slumped too, following public criticism of Fed Reserve Chair Jerome Powell. US President Donald Trump. Take a look.
Donald Trump has Federal Reserve Chair Jerome Powell in his sights, and that has markets rattled again. Late last week, White House economic advisor Kevin Hassett said the US president and his team continued to assess if they could oust the central bank boss. Trump himself has accused Powell of being too slow to cut rates and said his termination cannot come fast enough.
And if we had a Fed chairman that understood what he was doing, interest rates would be coming down too.
On Monday, the dollar found a new 3-year low against the euro and a decade low versus the Swiss franc. Many stock markets were shut for Easter holidays, but in Japan the Nikkei index was down around 1% by lunchtime. Meanwhile, money flowed into traditional safe havens, with gold touching a new record of over $3,380 per ounce. Legal. It's not clear whether Trump has the power to sack Powell. A case now at the Supreme Court over the firing of 2 federal Labour Board members is being closely watched to see what precedent it sets. Powell has said the law does not permit his removal and he won't go even if Trump asks him to.
So our independence is a matter of law.
He has said he is determined to serve to the end of his term in May next year. Investors are concerned that political pressure on the Fed could undermine its credibility just as it faces some tough decisions. Powell has said Trump's sweeping global tariffs are likely to raise inflation and slow growth, leaving the bank with a tough call on interest rates.
Staying with the US dollar index slid to as low as 97.92 in early trading hours on Monday. It's the lowest level that the index has seen since March 2022. The benchmark dollar index declined by 5% since early April, the time when President Donald Trump shook global financial markets with the unveiling of his sweeping tariffs on nearly every country in the world. The index, which measures the dollar against 6 major currencies, stood at 98.78, down 0.6%. A reading above 100 indicates a strong position of the dollar, while a reading below 100 reflects a weak position to the currency relative to other world currencies. Meanwhile, gold has climbed to a fresh all-time high of more than $3,440 per ounce on Monday. And well, the Monday bloodbath on Wall Street saw the Dow Jones close as low as 2.48% in the red. Look at the sea of red on the Dow Jones Industrial Average Index. This was down about 2.5% in trade yesterday. All this coming in reaction to US President Donald Trump saying that he would be too inclined to fire Fed Chair Jerome Powell. Meanwhile, the tech-heavy Nasdaq index was down about 2.5% in trade on Monday. And the S&P 500 again registering a sea of red. The top 500 companies in the US all in the negative by as much as 2.3% or so in trade. And moving on to Asia now, Huawei Technologies plans to begin mass shipments of its advanced 910C artificial intelligence chip to Chinese customers as early as next month. Now, some shipments have already been made according to some reports. The timing is nothing short of fortuitous for Chinese AI companies, which have been left scrambling for domestic alternatives to the NVIDIA H20 chips. Take a look.
Shares of NVIDIA dropped nearly 6% Monday morning after sources told Reuters that rival Huawei will begin mass shipments of its advanced AI chips to Chinese customers. Two people familiar with the matter told Reuters the shipments could begin as early as next month and said some shipments have already been made. Chinese companies have been scrambling to find a domestic replacement for NVIDIA's H20 chip, which the Silicon Valley giant had until recently been able to sell freely to the Chinese market. The Trump administration, seeking to limit China's technological development, told NVIDIA this month that sales of its H20 chip would require an export license. As a result, one tech policy consultant told Reuters that Huawei's 910C chip.
All right. Well, moving on now, a Delta Airlines plane carrying nearly 300 passengers suffered an engine fire after pushing back from the gate at Orlando International Airport in Florida on Monday. This forced passengers to evacuate using slides. Live visuals there. Not live, I beg your pardon. Recorded visuals of yesterday, Delta Airlines, and that's the fire blazing out of one of the engines. This forced passengers to evacuate the aircraft using slides. And US Defense Secretary Pete Hegseth has shared details of a March attack on Yemen's Iran-aligned Houthis in a message group that included his wife, brother, and personal lawyer. A source familiar with the matter told Reuters on Sunday. These revelations have come at a particular delicate moment for Hegseth, with senior officials ousted from the Pentagon last week as part of an internal leak investigation. The embarrassing incident seemingly involved all of President Donald Trump's most senior national security officials. Well, remember, this is the second time it is under fire for leaked confidential information on a non-confirmed signal messaging chat. More details in this report.
U.S. Defense Secretary Pete Hegseth shared war plans in a second signal chat that included his wife, brother, and personal lawyer. That's according to a source familiar with the matter who spoke to Reuters on Sunday on condition of. In the second chat, Hegseth shared details of a March attack on Yemen's Houthi rebel group, including the schedule of the airstrikes. Similar to those revealed last month by The Atlantic, the magazine's editor-in-chief Jeffrey Goldberg was included in a separate chat on the Signal app by mistake. The embarrassing incident involved all of President Donald Trump's most senior national security officials. The source said the second chat included about a dozen people and was created during Hegseth's confirmation process to discuss administrative issues. Hegseth's wife, Jennifer, a former Fox News producer, has attended sensitive meetings, according to images the Pentagon has publicly posted. His brother is the Department of Homeland Security liaison to the Pentagon. The revelations come at a particularly delicate moment for Hegseth, with senior officials ousted from the Pentagon last week as part of an internal leak investigation. One of Hegseth's leading advisors, Dan Caldwell, was escorted from the Pentagon after being identified during an investigation into leaks at the Department of Defense. 2 less senior officials were fired on Friday. The latest news has renewed calls by Democratic lawmakers for Hegseth to step down. Senator Tammy Duckworth said that he, quote, must resign in disgrace, while Senate Minority Leader Chuck Schumer said on X that Hegseth, quote, must be fired. A Pentagon spokesperson, without evidence, said that the media was, quote, enthusiastically taking the grievances of disgruntled former employees as the sole sources for their article. Meanwhile, a White House spokesperson said that, quote, recently fired leakers are continuing to misrepresent the truth.
And that's all we have for you on this edition of Morning Brief at 9. Thank you very much for watching, but news continues right here on News 9, so stay tuned.
Smash your way to glory at the NEWS9 Corporate Badminton Championship. Get ready for the ultimate badminton showdown. NEWS9 presents the biggest corporate championship, a battle of skill, speed and supremacy. Cash prize of 6 lakh rupees across categories. Venue, LAKH